Hello, everybody, and welcome to the Fisher Colloquium here in the Rafiq Hariri Building at the McDonough School of Business at Georgetown University. We also want to welcome those joining us on our live stream for this event. My name is David Vandeveer, and I'm the Executive Director of the Passero Center for Financial Markets and Policy here at the McDonough School of Business. At the Passero Center, we provide nonpartisan thought leadership for global finance by convening academics, policymakers, regulators, industry leaders, students, and institutional decision makers from our home here in Washington, D.C. As an intellectual honest broker, facilitator, and educator, the Passero Center for Financial Markets and Policy serves as the intersection between policymakers and practitioners to foster discussion and debate on global finance and its role in broader societal issues. On a personal note, I just want to say that I'm very happy and honored to have my longtime and dear friend Mickey Bowman at Georgetown University. Governor Bowman will be delivering remarks today, and then the Passero Center's founding director, Dr. Reena Agarwal, will do a sit-down moderated discussion with Governor Bowman, and then we'll have questions from students. By way of introduction, Mickey is a member of the Board of Governors of the Federal Reserve System and has been a governor since 2018. She is the first Fed governor to fill the role created by Congress for someone with community banking experience to serve on the Federal Reserve Board. Prior to her confirmation in the Senate, by the Senate, Mickey had been the state bank commissioner for the state of Kansas, and prior to that, she had been vice president of the Farmers and Drovers Bank in Kansas. Mickey had previously worked in Washington, D.C. for Senator Bob Dole of Kansas from 1995 to 1996, when I first met Mickey. She also served on Capitol Hill as counsel to the U.S. Senate Committee on Transportation and Infrastructure, as well as on the House Committee on Government Reform and Oversight. Additionally, Mickey served at the Federal Emergency Management Agency, FEMA, and was a Deputy Assistant Secretary at the Department of Homeland Security. Without further ado, please join me in welcoming to Georgetown Governor Mickey Bowman.
Well, thank you very much, David. It's really a pleasure to see you after all of these wonderful years have passed. We've aged just a little bit, I think, over that time. But it's really wonderful to be invited to come and speak about issues of great importance to the United States and to the Federal Reserve here at the Passero Center under Reena Agarwal. It's really been a fantastic opportunity to get to know you, some of your other faculty members, and some of the foundation members of the Passero Center before our conversation today, as well as last week when we were able to have a nice visit about what we were going to talk about today. So first, let me just say it's really a pleasure to be here with you today at Georgetown University to discuss the evolving money and payments landscape in the United States, which is a topic of primary importance to the Federal Reserve. Technological innovation has changed this landscape in recent years as we've seen the emergence of new financial services entrants offering new payment services, new platforms designed to increase the speed of payments, clearing and settlement, and new forms of digital money. Over the past several years, and as a direct result of these developments, we've seen a significant increase in attention on central bank digital currencies, or CBDCs, from central banks around the world, in addition to a great deal of international and domestic engagement on CBDC. A number of central banks have taken steps to begin exploring the potential uses of a CBDC in their home countries, but only a very small number have actually adopted a CBDC for their local jurisdictions. And of course, discussions of the purpose, design, and potential risks of a US CBDC and technical research about key design elements continue here in the United States. While the Federal Reserve plays an important role in these ongoing discussions and in the technical research, it's important to understand that the Fed would not implement a CBDC without the express approval of Congress. In broad terms, a CBDC is simply a new form of central bank liability, a digital liability. Because it is issued by a central bank, CBDC is typically thought of as being denominated in the currency of that central bank. One could imagine a digital US dollar, a digital euro, or a digital pound. Beyond this baseline definition, though, what is a CBDC defies a simple definition. A CBDC built on a distributed ledger technology offers a wide range of design and potential use options, as well as creating potential risks. This variability complicates any discussion of a CBDC simply because, more likely than not, we're not all talking about the same thing. There are really two threshold questions that any policymaker needs to ask before a decision to move forward with the CBDC can be made. First is, what problem is the policymaker trying to solve? And is a CBDC a potential solution to that problem? Second, what features and considerations, including unintended consequences, may a policymaker want to consider in deciding to design and adopt a CBDC? While it would be impossible for me to provide a comprehensive analysis of every issue surrounding CBDC, my goal today is to offer a perspective on these two threshold questions and to conclude with some thoughts about the imperative for future research on CBDCs and the potential of CBDCs in the United States. So the first question, what problem could a CBDC solve? And that really is the fundamental question in my view. So let's first talk about the CBDC and the payment system. One issue being examined is whether a CBDC, or even broader forms of digital money, could make the payment system more efficient. Do these technologies present opportunities to increase the speed of payments and/or lower costs and frictions within the payment system? Of course, this question takes place in the context of the payments infrastructure in each jurisdiction, both for domestic payments and for cross-border payments. Many countries have launched faster payment systems and continue to investigate how central banks can support these payment systems. We've seen a wide range of motivations for this work, including addressing specific inefficiencies in the payment system, providing a CBDC if cash use were to decline in that country, or promoting broader private sector innovation for future generations of payments. Improving the speed of payments, particularly with retail payments, can be accomplished without the introduction of a CBDC. In the United States, beginning this year, the Federal Reserve's FedNow service will enable banks in the United States to offer customers the ability to send and receive payments in real time. Policymakers have also raised other arguments for why a CBDC may be suitable in their home countries. Some have argued that a CBDC would facilitate large value transactions between financial institutions. Others see CBDC as a vehicle to improve upon international payments. And still others view CBDCs as necessary to preserve the role of central bank money as a stabilizing force in the payment system and to safeguard monetary sovereignty, or to ensure that digital money has a high degree of safety and uniformity to promote innovation and competition. So one reason we've heard for the creation of CBDC is financial inclusion. So let me take a few minutes to talk about that. Another issue that's been raised is whether innovation in money and payments, including a potential US CBDC, could improve financial inclusion. We can all agree that financial inclusion is a very important goal when considering improvements in access to financial services, to banking, and to the payment system. However, in the United States, over 95% of US households have at least one member of the household with a banking relationship, holding a checking or a savings account. Of the remaining 4.5% who are not banked, nearly 3/4 have no interest in having a bank account, and approximately 1/3 of those cited a lack of trust in banks as a reason for not having a banking account. I think it's unlikely that this group would find the government somehow more trustworthy than highly regulated banks. But unbanked households are also less likely to own mobile phones or have access to the internet, which would present barriers to CBDC adoption. While there's been important research on these barriers to adoption, including consumer attitudes and technology requirements, policymakers also need to consider whether there are other means to improve financial inclusion, such as alternatives for making the distribution of government benefits more efficient and effective, like promoting financial literacy. Another issue regarding the consideration of a CBDC is the implementation of policy objectives. So whether the government should use new technologies, including a potential CBDC, to accomplish a variety of policy objectives beyond those directly related to the operation of an efficient and safe financial system. Imagine a scenario in which fiscal spending in the form of government benefits or payments could be transferred via CBDC and could include a limited time frame in which they could be spent before expiring. Enabling this type of limit through a CBDC would stand in stark contrast to the flexibility and freedom embedded in physical currency or bank deposits, and could serve to control or even harm consumers and businesses. So there's also a risk that this type of control could lead to the politicization of the payment system, and at its heart, how money is used. A CBDC that permitted this type of control not only has the potential to allow the government to limit certain types of private spending or limit access to banking accounts, it could also threaten the Federal Reserve's independence. So let's talk a little bit about the efficiency and speed of the payment system. CBDCs are often discussed in the context of providing fast or instant payments for a variety of transactions, whether consumer to business or person to person. As I previously noted, the introduction of the FedNow service in the United States and other instant payments platforms globally leads me to ask, what could a CBDC accomplish, if anything, over and above what instant payments platforms alone can accomplish? There are potential use cases in the context of certain interbank transactions in wholesale markets, where some transactions are slow and heavily resource-intensive to clear and to settle. Participants in the wholesale financial markets have been considering innovative ways to address these frictions with newer technologies like distributed ledger technology, in which shared information across counterparties could be leveraged to increase speed and reduce back office costs to reconcile transactions before they settle. In the public debate about CBDC, some have argued that the introduction of a wholesale version of a CBDC could fully unlock the benefits of these newer technologies for these financial market use cases. But similar to the questions noted for a retail-level CBDC, policymakers must carefully consider the wholesale use cases, including whether there's added value of a wholesale version of CBDC in supporting new infrastructure to financial transactions over and above the existing methods. So one area that has been highlighted in the conversation about CBDCs and the need for them is cross-border activities. In the international context, frictions and high costs are pain points often associated with cross-border payments. Many policymakers have discussed whether CBDCs could play a role in streamlining cross-border payments by using new technologies, including simplified distribution channels, and creating additional opportunities for cross-jurisdictional collaboration and interoperability. Of course, these opportunities may be limited by the regulatory and legal safeguards in place for payments between countries with different legal structures, including customer identification, customer due diligence, and sanction screening for compliance with regulations and policies for Bank Secrecy Act and anti-money laundering, the BSA/AML requirements. These competing priorities are challenging to reconcile. While cross-border payments are among the slowest and least efficient, they also raise substantial legal and regulatory compliance concerns that would apply equally to CBDCs. So one thing that you've probably heard about is the international role and the dominance of the US dollar. So another consideration is whether a CBDC, or the lack of it, would affect the role of the US dollar in international trade. In my view, the dollar serves in this role because of the size of the US economy, its deep and liquid financial markets, the strength of our US institutions, and our commitment to the rule of law. A CBDC, or the lack of a CBDC, may not meaningfully change the existing incentives for people, firms, or countries to conduct business in the dollar. Therefore, maintenance of the dollar as a global reserve currency will require broad policies that foster economic growth, liquid markets, and an unwavering commitment to the rule of law. And we should have an imperative to research and experiment with new technological innovation. But I'll come back to this point in a few minutes. Some countries have seen declining cash use in their jurisdictions. So in those jurisdictions that have not adopted a CBDC, cash is generally the only central bank money that's available to the public. And it remains an important and popular means of payment. In some countries, however, digital payments have rapidly supplanted the use of cash. As a result of this trend, many central banks have cited the importance of access to central bank money by the general public as a potential reason to issue a CBDC. For example, Sir John Cunliffe of the United Kingdom examined the central role money plays in social and economic stability and concluded that because private money has been replacing the use of government money over time, that at some point, a retail general purpose currency will be needed in the UK. Because the Federal Reserve is committed to ensuring the continued safety and availability of cash, a CBDC could be considered as a means to expand safe payment options, not to reduce or replace them. So an important issue for us to consider would be whether a CBDC could provide the public with a more attractive alternative to cash in a world that may be shifting away from cash-based payments. In probing this question, we also need to consider the privacy implications and whether a CBDC would be a better alternative than private sector solutions. So one issue that's been very hotly debated and discussed is stablecoins. So let's talk a little bit about the interaction of stablecoins and CBDC. Some new private forms of money, often referred to as stablecoins, have emerged mainly to support trading in the crypto asset ecosystem, both as a means of payment and also as a store of value. These stablecoins, which purport to have convertibility one-for-one with the dollar, have also been discussed as an alternative to traditional payments. However, stablecoins are less secure, less stable, and less regulated than traditional forms of money. And their structures and frameworks are opaque. To the extent stablecoins become widely used in day-to-day payments, these features could raise significant concerns. Of course, issuing a CBDC has been discussed as a potential alternative to stablecoins that could address some of these shortcomings. It's also possible that Congress could pass legislation to strengthen the regulation and oversight of stablecoins to mitigate some of these issues. And I'm sure many of you in this room will be following the developments in Congress closely on this and other digital assets related legislation and issues. But regardless, It is important for us to continue to evaluate the evolving landscape of digital assets and to understand whether and how well-regulated stablecoins, or a CBDC, would interact with each other and with the broader payment system. The Fed's ongoing exploratory work helps us to think critically about a future shaped by innovations in payments and the broader economy, including instant payments and new potential forms of money and payment systems like CBDC and other digital assets that could potentially play a larger role in the economy. While the investigation of CBDC raises many policy questions, for the purposes of today's discussion, I'll focus on a few key areas that are important from my perspective. The first is privacy considerations. As we consider these potential opportunities for improvements in innovation, we must also note that the introduction of CBDC could present significant risks, challenges, and trade-offs. First, in my view, safeguarding privacy is a top concern, and it's often identified as a top concern of consumers and other stakeholders. As a baseline, we need to think about how to protect the privacy of consumers and businesses, while also establishing an appropriate level of transparency that would deter criminal activity. We must ensure that consumer data privacy protections that are embedded in today's payment systems continue and are extended into future systems. In thinking about the implications of CBDC and privacy, we must also consider the central role that money plays in our daily lives, and the risk that a CBDC would provide not only a window into, but potentially an impediment to, the freedom Americans enjoy in choosing how money and resources are used and invested. So a central consideration must be how a potential US CBDC could incorporate privacy considerations into its design, and what technology and policy options could support a robust privacy framework. The issue of privacy may be less difficult to address when considering wholesale use cases, in which a CBDC would only be used by traditional financial institutions to conduct a limited range of financial market transactions. As with many of these considerations, the purpose and intended function of a CBDC has a major impact on its policy and design considerations. So I'll talk a little bit now about the interoperability and the innovation aspects of a CBDC. So relatedly, one possible way to design a CBDC could be to focus on providing a foundational layer on top of which banks and other eligible institutions could build their own technology. In such an intermediated model, banks and other eligible institutions would build technology on top of a CBDC that could be offered to retail consumers and others to provide products and services that may not be available today. It would be important to understand how such a layer would connect on or interact with existing and new payments infrastructures. It's also useful to consider what types of innovations this could encourage. Some of the research on the design and functionality of CBDCs contemplates things like increased programmability, allowing the efficient transfer of money through the use of so-called smart contracts that could improve upon existing regulated forms of money and payments. These are definitely important questions that are worth exploring, but they link back to the identification of the problems that a CBDC would be designed to solve. In my view, one of the most important aspects of this conversation is the unintended effects on the US banking system. So it's absolutely necessary to consider the potential impacts of a CBDC on the banking sector. Today's banking system delivers important benefits to our economy, and as I noted earlier, it's continuing to evolve through innovations like the improved availability of instant payments that I've already discussed. There are significant risks in adopting a CBDC that cannibalizes rather than complements the US banking system. And the US banking system is a mature, well-functioning, effective, and efficient system. Banks provide consumers access to credit and other banking and payment services. Banks also support public policies, including reporting on suspicious or criminal activity through their BSA/AML compliance and reporting responsibilities. But more importantly, banks play an essential role in the transmission of monetary policy and supporting a well-functioning economy and financial system. If the Federal Reserve were to be authorized and directed to implement a US CBDC, we would need to carefully consider how an intermediated CBDC with private sector service providers could be designed in a way that maintains financial institution involvement and minimizes disruptions to the financial system. If not properly designed, a CBDC could disrupt the banking system and lead to disintermediation, potentially harming consumers and businesses, and it could present broader financial stability risks. Consider the consequences of a CBDC that pays interest at comparable or better rates than commercial bank deposits and other low-risk assets. It seems likely that such a CBDC would reduce the funds available to lend and increase the cost of capital across the economy. Likewise, we need to consider the effect on bank stability and the potential of even more rapid bank runs in a world where there are fewer constraints on the volume and the velocity of payments. The ongoing demand for private and public options to facilitate instant payments could certainly exacerbate these concerns. These are exactly the types of issues that policymakers must confront. It would be irresponsible to undermine the traditional banking system by introducing a CBDC without appropriate guardrails to mitigate these potential impacts on the banking system and on the financial system. So at the Federal Reserve, we think it's imperative that we continue to research the technology that would support a CBDC. And our work continues to explore an array of CBDC design choices and the challenging consideration of policy trade-offs that this multitude of choices represents. It is imperative that each of these trade-offs is carefully evaluated and, of course, thoroughly understood. Where opportunities for improvements may exist, we should ask whether a US CBDC is the most efficient and effective means to make such improvements. Or are there better alternatives, such as enhancements to current payment infrastructures? Apart from focusing on payments alone, it's also worth considering whether other policies would more effectively target financial inclusion, including policies that are beyond the remit of the Federal Reserve. And in the absence of a CBDC, some of the risks I noted may still exist as the private sector continues to innovate, including the risk of substitution from commercial bank deposits to digital wallets and the migration to less regulated digital assets, including stablecoins. With such significant potential opportunities, risks, and trade-offs, it is essential that the Federal Reserve continue to thoroughly research and engage with stakeholders to further understand these issues. Future decisions about the implementation of technology innovations in money and in payments, including the potential of a US CBDC, must be informed by a deep and thorough understanding of the potential intended and unintended consequences, as well as an understanding of whether a CBDC would be the most effective and efficient means to improve the payment system and address identified problems. The Federal Reserve has continued its independent research and technological experimentation on digital innovations, including digital assets and a CBDC. But specific to CBDC, the Federal Reserve established a program of work with the following 3 priorities. First is to carry out policy analysis to provide perspectives on issues articulated in the board's January 2022 discussion paper. The second is to conduct technology research and experimentation to inform potential CBDC designs. And third is to invest in engagement with the public, the industry, academia, and the public sector to bring along stakeholders and obtain needed expertise. So in conclusion, I'll talk a little bit about the potential of future of a CBDC in the United States. So of course, the evolution of money and payments continues. It's important for the Federal Reserve to continue looking ahead to anticipate potential changes to money, to payments, and the digital landscape well into the future. With this in mind, our consideration of other potential innovations to money and payments, including a potential US CBDC, must be viewed through the lens of how the payment system would be improved beyond what instant payment services will achieve. We should ask what current frictions exist or may emerge in the payment system that only a CBDC can solve, or that a CBDC can solve most efficiently. In my view, it's important that the Federal Reserve is part of the ongoing conversations around CBDCs, whether or not a CBDC is ultimately created in the United States. As the Fed continues to monitor developments in other jurisdictions, we will work closely with international counterparts on payments, innovation, CBDCs, and other related topics. This includes work with multilateral institutions like the Bank for International Settlements, the G7, and the Financial Stability Board, as well as bilateral engagements with other central banks. From my perspective, there could be some promise for wholesaled CBDCs in the future, for settlement of certain financial market transactions and processing international payments. But when it comes to the broader design and policy issues, particularly those around consumer privacy and impacts on the banking system, it is difficult to imagine a world where the trade-offs between the benefits and unintended consequences could justify a direct access CBDC for uses beyond interbank and wholesale transactions. It's important that we thoughtfully examine the evolving money and payments landscape and digital innovations broadly, including a potential US CBDC. In addition to understanding international approaches to these issues, the Federal Reserve's research, experimentation, and outreach to stakeholders help us gain important input and perspective on these issues. But apart from these ongoing CBDC-related efforts, the Federal Reserve is committed to the successful implementation of FedNow, which is expected to support the broader adoption of instant payments in the United States, meaningfully evolving and upgrading the US payments infrastructure for consumers and for businesses. So I'd just like to say it's really been a pleasure to be here with you, especially at the invitation of the Center's Executive Director, my longtime good friend, David Vandeveer. And I look forward to answering your questions in our conversation with Rena.
Bowman for providing a very comprehensive sort of analysis on why or why not the U.S. needs or doesn't need a CBDC, and what's the research that needs to take place before we decide whether we need a U.S. CBDC or not. So I guess in my mind, I worked on some CBDC-related research. It wasn't so much about whether we should have one or not, but trying to make sure that we do all the research so that we are ready to implement one. It's not obviously one of those things where you turn the switch on.
Exactly.
And so can you give more of a sense of where are we today? Where is the Federal Reserve? and other parts of the US government in terms of the research, the planning for a potential CBDC?
That's a great question, Rena, and I think it's one that's really important, and we've been thinking about it for a number of years, especially at the Federal Reserve. I know many other parts of the government and the administration have been thinking very deeply about how this development and conversation could continue and develop among the different agencies that might have some responsibility in this area. We've engaged in technological experimentation and interrogation of many different types of technologies, the development of different technologies through partnerships with different universities like the Hamilton Project. And we've seen a lot of promise with a number of the different abilities and capabilities that have been created and identified through this technical research project. So we're continuing to work throughout the Federal Reserve System to bring together our expertise within the system to work and to further all of that technological experimentation so that when the time is right, we're either poised to implement or we're poised to interact with other countries' CBDCs if that becomes the opportunity that's identified for the United States.
And so in addition to the Federal Reserve, what other parts, what role does Congress need to play? What role do other parts of the US government need to play?
So the U.S. Treasury has been leading a working group to help to further the conversation among the other parts of the administration to have conversations about this. But as I mentioned in my speech, we are very committed to ensuring that we have clear authority to move forward should we be directed and authorized to create a CBDC, and that would have to happen from Congress, from our perspective.
You talked about our role and the role of the dollar in the global reserve system and the global finance arena. And obviously, we are very safe in terms of the U.S. is seen as, for all the reasons that you mentioned, why the dollar is the currency that's used globally. But, we've gone through this time period with sanctions, and there are certainly countries who are watching out and thinking about that they don't want to get in the U.S. sanctions regime and caught up in that. So I think there are countries who are now thinking maybe an alternative would be better. Again, it's not something that's changing tomorrow or day after tomorrow, but is that something that is of concern? I mean, the Chinese are moving at a fast pace with the yuan, but even beyond the digital currency, it's much more of a strategic play on their digital strategy.
That's a great point, Rena. And I think it's important to understand that each country may have different motivations for how it's engaging in the thought process of the value of a CBDC or whether there isn't a value of a CBDC exploration for their particular circumstances. As you noted about sanctions in particular, that may be motivating some countries. I think as we're looking at all of the public policy aspects, that certainly is part of the conversation that comes up as we're thinking about what the potential policy conversations might need to incorporate.
Yeah. One of the things you talked about, sort of technology and speed and everything being available 24/7, if we had a digital currency, a central bank digital currency, things could be 24/7. But then I'm thinking of Silicon Valley Bank, where because of technology, whether it was on Slack channels or wherever, the word gets out really quickly and deposits can go out. Are some speed bumps a good thing?
I think that's an excellent observation, and it's something I tried to touch on a little bit in my remarks about the velocity of payments, and by creating instant payment, the potential for a framework that enables instant payments, that we could be creating vulnerabilities in our banking system, and that there would need to be safeguards and guardrails put in place to ensure that we're not facilitating an environment that could lead to that as well. And obviously these things are new developments, and so as we're thinking about all of the different aspects that need to be discussed and considered, this is certainly one that's very important.
You talked about the role of the banking sector and financial intermediaries and how important that is. Are the banks pushing back against CBDC? Or are they coming in to you and making a case for why it's not needed or how it should be structured?
I think there's a broad concern about the disintermediation or the potential for disintermediation within the banking sector. As I mentioned in my remarks, we have a very strong, a very mature, effective, and efficient banking sector that provides services broadly to people in the United States and throughout the world. It's very important that we not disrupt or disable our current financial system because we think a new technology might be more interesting. But certainly the idea and opportunity to think about how those things might interact together is something that we should be thinking about and considering. Whether ultimately we decide to move forward or we are directed to move forward with a CBDC or not.
So talking about the banking sector, moving away from CBDCs a little bit, there's been a little bit of volatility in the banking sector that has impacted the economy and the financial markets. Do you think it's calmed down? And do you think more problems emerging or it's calmed down?
I think that's another excellent question, Rena. I think that's something that we are watching very closely to ensure that the conditions as they appear to be now, which is quite calm, and that things have returned essentially to normal, that we'll continue to see normalcy moving forward. But we are clearly very attuned to any challenges or changes that might require us to be responsive to any conditions that might emerge.
And so based on what's happening in the economy and the economy tending to slow down, and some people obviously talking about a recession, does that mean that the Federal Reserve doesn't have to worry so much about cutting interest rates and the economy is taking care of, the markets are taking care of things themselves, or both are still needed?
I think it's important to understand how the conditions that existed in the wake of the failure of Silicon Valley Bank and Signature Bank may affect banking conditions going forward. I think we've been seeing differences in expectations for economic conditions moving forward, and my thought is that we'll probably see things continue in the same vein that they were prior to the failure of those two institutions, and that those similar conditions will continue to affect the economy in ways that we have yet to understand.
And I assume there's a lot of work going on at the Federal Reserve right now in terms of thinking about future regulations, stress tests, how things should be changed. Can you comment on any of that?
Well, I think as Vice Chair Barr has noted, that there's a lot of work underway to take a look at our regulatory system and different aspects of that going forward. I assume that work will continue as he had articulated prior to the banking events.
Fantastic. I know you're on a tight timeline, but we want to squeeze in a few questions.
Sure.
If you have a question, we'd love to especially hear from our students. There's a microphone, just raise your hand. And we have a question here, Evan.
Good afternoon, Governor Bowman. Thanks for being here. I wanted to ask you about a few blockchain projects that are around there. Currently, there's 9 projects, cross-border projects, which are wholesale in nature, and 7 projects which are retail in nature, which are being developed for cross-border interaction. Do you think US is falling a bit behind on these things since they're not involved in any of these projects, and countries like France, Switzerland, Canada, and even Singapore and Hong Kong are involved in these cross-border projects?
I think it's very important that we're aware of these projects and the outcomes as they're being developed, and what the promise might be with some of these experiments as they're moving forward. I think it's important because we have such a responsibility to the stability of our financial system that we don't get excited about the fear of missing out. We need to ensure that whatever we're doing methodically, thoughtfully, and carefully so as not to disrupt the stability of the financial system. But it's exciting to see all of these developments happening around the world, and I'm as excited as you are to see the outcomes. So I look forward to following that.
Yeah, please introduce yourself.
Hi, my name is Luke. Thank you so much for your presentation here. You spoke about some of the negative risks of substitution, but on the positive side, it seems like most of the upside comes from, in the wholesale markets, as you said. But the financial inclusion sounds like, doesn't look like there's much upside there. Do you think there are any opportunities for everyday Americans that could come from a CDBC?
I think it's too early to tell. I think at this point, what my understanding of, and as I see it, what we see initially as an opportunity could be for that wholesale side of that sector. I think it's very important that we continue to have an intermediated banking sector and finance sector where we have banks that are providing those direct relationships to individuals. So that would be ultimately, were we to consider something along those lines, that would be something that I would be very interested in learning more about, but to ensure that there is that intermediation of services that might be provided.
There's a question over here, and we'll have to make that our last question.
First of all, thank you for taking time to speak to us today. I'm Rohan Mistry. I'm a freshman here at the business school. And so as we're seeing other nations also tackle the similar question when it comes to CBDCs, at the Fed, how are you weighing the decision of implementing a US CBDC in reaction to other nations issuing their own CBDCs? And if the US were to issue their own CBDC, how do you see this impacting the future competitiveness of the US dollar in the global marketplace?
Well, I spoke a little bit about the strength of the US dollar, and it relies on a number of factors that exist independent of a CBDC. I think it's very important that we understand how other countries are thinking about and considering the use cases and values that could be added by the creation of a CBDC. And as they're continuing to develop or deciding to step back from, which I understand some countries have thought that that would be a path that they would like to pursue, but now are stepping back a little bit from acting so quickly. I think it's important that we're cautious in how we're approaching it, but that we're very curious about the experiences of other countries as they're experimenting, interrogating, and trying to understand how a CBDC could be best used in their jurisdictions. So it's a great question. Thank you.
Well, please join me in thanking Governor Bowman. That was fantastic.
Thanks so much.
Thanks a lot. That was great. Yeah, thank you for coming. And thank you, everyone. We look forward to seeing you at other Passaro Center events.